Hey everybody, it's Pete. Good morning. It is Tuesday morning, December 15th, 2020. Welcome to a new episode of today's Best Stock Picks. Before I forget, I'm hosting a webinar tomorrow night, December 16th at 6 p.m. Eastern Time, where I'm going to teach the New York Method live. So I'd really like to invite you there. Just click down below and make sure you register. It's limited to 500 people. I think we're going to exceed that, so you definitely want to get on the list early. Today, we're going to talk about a stock that we haven't talked about in a long time because it's just been kind of meandering. A lot of the other streaming services have been getting a lot of press lately. We're going to talk about two of them today, actually, but the number one that we want to talk about is Netflix. Netflix finally woke up yesterday, gave us a really good intraday trend with some significant volume. Hasn't quite broken out of the range that it's been in for a couple of months. However, it is now in play. What we'd like to talk about is order flow started to flow into the stock. And it started to get some attention. So we're going to focus on today specifically with the market pulling back yesterday after having a pretty decent day on Friday where we closed strong, looking for follow through on Monday. Got the follow through, but what we've been talking about where they couldn't hold the bid and was just persistent selling during the day. So what we're going to focus on today's stock picks are stocks that showed relative strength yesterday while the market was weak, and some stocks that have obvious bullish order flow, but now the tape has pulled back a little bit, setting up new buying opportunities in that direction. We were looking to buy Luminar yesterday, LAZR, didn't find the entry that we liked, so we just stayed away. We're setting up today, looking for another entry, but we're going to mostly be focusing on Netflix today. So let's head on over to the charts and let's take a look at Netflix as well as Twitter today, interestingly. So you can see the market closed strong on Friday. It traded into what we normally call a bullish U-turn, which is where it trades lower and then reverses and then sets up a trade the next day. Because of the gap, we didn't get involved right away out of the gate. And then we started to have to use our tape reading parameters that we use. And it just didn't give us a chance during the day to say, okay, we like it. The market's bottomed out. Let's start looking. We thought we might have had that a little bit late in the afternoon, but it didn't transpire. So we just looked for individual sectors and stocks to be trading today, yesterday. And PENN actually gave us one of those opportunities during the day, which we're going to talk about in a second. But this is actually one of the reasons that day traders should have definitive profit targets during the day. The stock basically bounced $5 in about 15 minutes. When that happens, it's very easy to let greed set in. But again, like we talk about all the time in the boot camp, this is real money. You're paying your bills with this. You want to do certain things with having this extra money. You want to see your account grow month after month after month and do some nice things in your life with that. If you have 1,000 shares of an $80 stock and it bounces $5 in your favor in a heartbeat, that's $5,000. That's real money. That's multiple months of mortgage payments or rent payments for some people. So I strongly encourage you, especially if you're day trading, what we have in the boot camp is really definitive targets to set for profitable trades so that this kind of stuff doesn't happen, where the easier profit that explodes in your favor comes back down and basically exits at the same place that you got in. So good job by a couple of people in the community yesterday who squeezed as much out of that as you possibly could. But I want to get over to Netflix before I start talking about PENN and Twitter actually today. So you can see that just basically since October, the stock has been kind of languishing between 510 and 470. Yesterday, it really perked up, though. It came out of a double inside day, closed near the highs when the market closed near the lows, and actually closed through a breakout level right near where it gapped down. So there's a whole mouthful of stuff on the tape that's going on in Netflix right now. It's not showing clear bullish order flow in longer time frames, but when stocks consolidate for a long period of time and then get even tighter on the daily chart and finally punch out of that, you can usually get a good 2 to 4 day run out of that for some nice cash flow. So we're really going to be focusing on Netflix. It looks like we're going to get a flat opening, which is awesome. So anything over yesterday's high is where we're going to start looking for the entry to look for a new swing trade and possibly a run back up to 560. Now, here's the thing. You're not going to risk yesterday's price action, which is pretty big, which is almost $20. You're not going to risk $20 on one trade in Netflix to make 40. It just doesn't make sense. However, what you can be doing, especially if you're at or near your computer during the day, is look to set a buy stop pre-market or after the market opens that's slightly higher than when the stock trades, because you want it trading in your direction a little bit. And then you end up using today's low as a stop loss. If you really want to drill down, this level right here around 515 would be, if you can't be in front of your screen, 515 would be my stop loss, roughly around 523, 524. So you're risking a little bit less, probably half of yesterday's candle in exchange for that run back up to 560. So that's what we're going to be looking at over the next couple of days. Twitter actually was fined yesterday for GDPR violations. But in case you don't know what GDPR is, it's basically General Data Protection Regulations. It basically means that all of the times that somebody logs into a website, you need to make sure you disclose what's going on with the data. They were fined in the EU about roughly 550,000 US dollars. But what's interesting about the Twitter trade is that we finally traded up to and through this 52 level. And I'll show you why that's significant, because if we go back and look at a little bit longer term charts, this is the level going back to 2014 where it stopped here in October and got back up there again. So this is knocking 4 times on this level. So it's going to be interesting today to see if the fine, which for Twitter is not really that big of a dollar amount, inhibits new buying. I will tell you this from a tape reading perspective, over 52 looking for a run at 72 looks pretty good right now. So I'm not going to ignore the news as much as what good traders do. You focus on what the tape is telling you. If we end up going well bid again through 52 today, let me zoom this out a little bit more, where we don't close near the lows, where we do close near the highs, where we see higher highs and higher lows over 52, that's when we're going to be initiating a new trade with a stop loss very cleanly below 52. So the trade is set up really good. It's 52 to 72, stop loss below 52, a close below 52. So the actual entry is outside of yesterday's trading range, which looks like it's around 53.5. So you're risking $1.50 to make roughly $19. I'll sign up for that trade all day long. In the same sector, or in the same thought process as Netflix, this streaming service, FUBO TV, has started to get a lot of volume. And if we really start to go deeper into the tape here, we can see that it's really become active. It's really getting some good activity. There's really some order flow flowing into it. What I don't like is the indecision candles on a day-to-day basis. It doesn't quite have that daily attention, but the stock has now woke up. It's increased in volume. Somebody, smart money somewhere, is starting to get a little bit more involved in this trade. Probably something you want to watch on the weekly chart, where you can see now that it's actually holding the bid. I don't like the fact that it's closing below the low here, but you can see the history of the stock. This is really the first time since the stock debuted that it's actually pushed, paused, and held now for a few weeks. So this is on my radar. It should be on your radar. It's not one of those stocks I'm looking to jump into yet. But it is something that now has made its way into my watch list to keep an eye on. Sticking with some of the stocks that have been very active recently that we're looking to trade on pullbacks, QuantumScape actually exploded last week. You had a couple of really good days of trading. We said we want to wait for it to pause. Now it's paused for 3 days. We had an inside candlestick 2-day pullback. Today, I'm looking for a test of yesterday's low or an opening range breakout intraday to look for a new test of 88. On the opposite side of trades, we're looking to be a seller of Netflix, SFIX, there are all these X's in my mind, Stitch Fix. Because of what Stitch Fix has done recently, the bullish gap, the 4 well bid days in a row now, actually 5 if you count the gap day. A higher opening today is setting up what we call a saturation play, where a higher opening and a push higher, especially within that first part of the day, should be for profit taking in my strategy. So what we're going to be looking for is a open here, a push higher, have a limit order higher to be exiting this trade, letting it pull back, and then looking for another one. And it's a really nice multi-day run here after some good news. L Brands actually pulled back after breaking out. Again, we talked a lot about yesterday in our coaching call that what do you want to see when a stock breaks out, and what you do want to see is follow through. In this case here, it broke through 41 and then immediately went well offered into an indecision candle, which led to 2 days of selling. The selling expanded yesterday, which tells me that now today we're going to be looking for a day to see a reversal and then actually make new highs. So we're looking for that one today. DQ, very similar, but on the opposite side. This time it was the first day of the stock punching through there, staying well bid, closing near the highs with good volume, and the market closing on the lows. So we have some room to go here. If we zoom out a little bit here, you can see where we are on the charts. Plenty of room to go here. Let me take that a little further. You can see where we are. We're actually punching through to all-time highs. So DQ is not Dairy Queen. It's an energy stock, so we're going to be keeping an eye on that one today. Very similar is PayPal. PayPal actually had 2 days of indecision, broke out, some pretty good news and following through today. So I'm going to be watching that one today as well. Stone, actually. Look at this chart. Really, really good, clean chart. Well bid for now 1, 2, 3, 4, 5, 6, 7, 6 out of 7 weeks in a row. And here's what we look like as far as the daily breakout. Again, paying attention to which stocks showed relative strength and the market was weak. This is one of them. So you got to be paying attention to where the money's flowing. ATVI, hopefully you participated in this one yesterday. We had this as our stock of the day yesterday. Did get some follow through. We like the stock making a run into all-time highs. So yesterday was the ideal entry. We call the optimal entry. Today's a little bit later on the scale, but still has some room to go. Twilio also is on our list, and now it's actually well bid for 3 days in a row and closed off the highs a little bit yesterday. So despite today's projected higher opening, if you start to initiate this position, it needs to be with a little bit less share size because we missed the optimal entry yesterday or the day before. I do like the long here still as well. Zillow meets the criteria that we just discussed with Stitch Fix, which is now because the stock has reached a saturation point. The stock went a little bit parabolic on yesterday's gap. A higher opening and a push higher today in Zillow will end up being a sale in my tape reading strategy. 2 stocks that we've been talking about for a while and in the semiconductor industry, Xilinx and AMD both offered some good opportunities yesterday. AMD finally trying to punch through that 92, 93 level. Now we're well bid and closed above that level. So looking for some follow through in AMD today as well. And finishing up with Snow, actually. This has been a stock that has had a lot of press lately and now giving a relief rally from roughly 430 to 330. Stock has now pulled back $100. So we are looking today for a bullish U-turn in Snow. So basically what we're looking for is after it's now pulled back, I'm looking for a little bit lower opening. I'm looking for buyers to step back in, see reversal and get another swing trade that should, the way we trade, roughly go back up to that 380, 390 level over the next few days. And we'll see, we'll manage it from there. But if we get that reversal today, looking forward to be involved there today as well. So again, don't forget about the webinar that I'm hosting tomorrow night, Wednesday, December 16th, 6 p.m. Eastern time. Click below. I'd really like to see you there. Hopefully you're, hopefully you have the time, and we'll spend at least an hour discussing in a lot more detail some of the stuff that we do here. And I'll actually make an invite for you to join the boot camp because end of year planning into next year is a really good time to just be ready to hit the ground running when January comes around. So if you have any questions, let me know. Definitely subscribe to the channel. That would mean the world to me. And have a great day and be an awesome trader today. Take care.